I'm John Hanna for CDTV.net here in New York City, and we have Greg Womack, President of Womack Investment Advisors, joining us from Edmond, Oklahoma. Hey, Greg, good morning.
Well, good morning, John. How's it going?
Oh, we have a little bit of cloudy here, but that was some scorcher last week for us, and I wanted to find out how you're doing with your. Are you guys getting some relief from the heat, the 100 plus?
We got a little rain last night, but it's been we've had 32 days of over 100 degrees, and they say it's still forecasted to be that way. We may break our old record. I think it's a little over 50 days. So no major relief in sight for some time here in Oklahoma and the Midwest area. So we're praying for rain.
There you go. Well, we're getting some clouds here in New York City now, and we're getting a relief from the several record-breaking temperatures here in New York City last week.
Wow.
Uh, and like I said, we got some clouds this week, and they say it's going to be around 80 degrees, so 80 plus degrees, which is going to be a relief for us here in New York. But that's really amazing what you guys are getting out there. That's really, 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 really hot.
I think it's all the hot air coming out of Washington. Nothing going on, but a lot of hot air. It seems like.
Okay, let's talk about that.
Yeah. Well, let's kind of last week. Some of the things going on in the market. You had the arm wrestling both here, mentioned in Washington, and abroad over the deficits and the debt, but investors had no problems with the risk aversion last week. The Dow saw its best day of the year on Tuesday last week, gaining more than 200 points, and then it followed up on Thursday with a 152-point gain. Investors were apparently willing to assume the U.S. lawmakers will reach an agreement on the debt ceiling by August 2nd deadline. So the small cap Russell 2000 and the Nasdaq bested their large cap brethren. Year to date, the Dow Jones is up around 9.5%. The S&P is up roughly about 6.95%. And the Russell's up about 7.42%, and Nasdaq finished last week about 7.76% up for the year. As of 12 noon today, John, on July 25th, Dow is down about 55 points, and the S&P about 4.8 points, mainly due to the lawmakers did not reach a deal to address the debt ceiling issue by Friday or even Sunday night on the 24th. So the markets are off a little bit. Actually, they're trading higher as we speak, meaning off their lows, but still down about 35 points on the Dow. So I think that's the big news this week. We've got some earnings coming out, but I think the big news is going to be what happens with the debt ceiling. We get some kind of an agreement. In speaking of that, let's talk about the debate, kind of what's going on with those numbers. Everybody's trying to reassure countries and other entities around the world that lawmakers, would not allow the United States to default. The path to raising the U.S. debt limit continue to be elusive, though. Primary points of contention continue to be how long any increase in that debt limit should be designed to last, and the proportion of spending cuts versus revenue increases. So talks between the White House and the House Majority Leader John Boehner over a package that would cut $3 trillion to $4 trillion from the deficit over 10 years broke down Friday. However, congressional leaders are continuing to explore various stopgap plans that would allow the August 2nd deadline to be met. And then you look at overseas and the European leaders, the anxieties over their sovereign debt was eased a bit when the leaders agreed to a second bailout for Greece that they hope will keep the contagion from spreading. And according to the agreement, bondholders will exchange their Greek bonds for ones with later maturity dates and possibly lower interest rates, in a move that credit agencies have suggested that in the past might be considered a selective default. So the Europeans bailout fund and the International Monetary Fund will lend an additional 109 billion euros. And the ability of the bailout fund to buy sovereign debt will also be expanded, and guarantees of backing for the bonds would enable European Central Bank to accept troubled bonds as collateral. So they've put a Band-Aid on the Greek situation to keep it from spreading. It's really kind of a short-term fix. Much like the one we have here in America, Washington, these debt limit August 2nd deadlines, in my opinion, are nothing more than just a temporary Band-Aid fix. We've got major issues to address spending, how we're going to raise revenues, quote, raise taxes, unquote. And that'll all be watched closely. But I think once the lawmakers come to a decision, I kind of feel like we'll see the markets actually have a sign of relief if they can do it this week within the next few days and not let this thing drag on. And there are a lot of things in the market I see right now as positives to keep the markets moving higher. One is the government will continue to do whatever it can to provide liquidity because they don't want the markets to go down. In my opinion, it would cause great uncertainty and push us probably into another recessionary period. Secondly, the markets have rebounded nicely off their 200-day moving averages, and we're seeing some momentum. We need to see the S&P break out of that 1370 plus range to see the resistance broke and hit another leg up. That could happen this week if the markets react positively to any good news coming out of Washington. And then lastly, we have number three, what I think is we have earnings are very good season right now. A lot of these companies, special global companies, are experiencing record sales and growth earnings reports. So with those three things combined, we could see this market have another leg up once the uncertainty out of Washington is resolved, even though it would be short term. On top of that, we had housing starts last week that were up about 14% in June, and that's almost 17% higher than last June's numbers. Sales of existing homes fell off just a fraction, a little under 1% in June. And then the global uncertainty helped the price of gold briefly top $1,600 for the first time last week. And oil prices turned back toward $100 a barrel as far as oil prices. As I mentioned, John, just kind of looking ahead for this week, European debt crisis is on the back burner. It's on simmer for now. Investor sentiment may reflect the weak stream of headlines. The progress or lack thereof of the resolution of the U.S. debt ceiling dilemma is likely to eclipse the earnings reports and the first look at second quarter economic growth. So releases this week we have on the 26th is new home sales. The 27th we have durable good orders. 28th pending home sales. On the 29th we have both labor cost and our initial estimate of the gross domestic product for the second quarter.
So what do you think if it's going to be this week or next week with regards to their decision on the debt ceiling?
If they wait until Monday, I don't think they will. I mean, I thought they'd have it done by Friday, but if they wait till Monday, you're going to see volatility pick up this week tremendously. I think it's just too close to the deadline. We got to, they got to come to a decision pretty quick. And to me, I don't. It's not. It's more a psychological deal. Nobody's going to miss their checks, and things are going to get taken care of. But it's just psychologically the markets and the image it gives us as a nation to these other countries.
Oh, I see. Is it more like a politicking now?
Oh, very much so. I mean, technically, it would be very painful if we're not even going to raise a debt limit. So you have a third of the government that wouldn't get funded. It'd be the least important parts of the government. And those people would have to go out and find jobs and do other things. But if that was a permanent deal, I don't think the politicians want us to know, hey, we can eventually live without a third of our government if we had to.
What?
So there's a lot of fear and a lot of fear-mongering and stuff going on to say, oh, we've got to do this or all, it's just going to be the end of the world. I think it'd be tough, but it'd be something that, we could live through. We could work through it and probably be better off down the road with less government. But that's my opinion.
That's Greg Womack, president of Womack Investment Advisors, joining us from Edmond, Oklahoma, and I'm John Hanna for CDTV.net in New York.